The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks, and I've got two more stocks for your aggressive growth stock radar. Let's just get right into it here. First one is Lulu, and that's the ticker, but everyone calls it Lulu, but it's Lululemon Athletica. Lululemon Athletica, and the ticker is LULU. Lulu. It is a Zacks rank number one strong buy, and like almost all of my aggressive growth stock videos, you're going to see an A for growth, and then a value score. Maybe that's different. In this case, it is. It's radically different. We've got an F for value, and anytime that I see that divergence, I know that I am automatically on the right path for finding a good aggressive growth stock. So let's take a look at why this stock is a Zacks rank number one. We can see that earnings estimates have been moving higher. So the current quarter trickling higher by a nickel. And if I look here for next quarter, going higher by 8 cents. For the full year, that is quite a move from 322 to 358. And next year, next fiscal year, oh boy, look at that, 374 to 422. That is a good move. Now, when we see something like that and we see the average positive earnings surprise is 19%, and we can see that that has really been growing. So, I mean, a little bit of downturn here from 7 to 4, but then from 4 to 20 and 20 to 40, those are big differences on your beats. And that's really going to make a difference. So let's take a look at the chart here, and we can see, boy, oh boy, this stock really running up. But you can see right here, we have got ourselves a little bit of a pullback. Stock has come in, not quite $20, but right around there. And I got to tell you that every time that this stock has seen a dip, dip buyers have been rewarded. Like, let's take a look at, this is probably the big dip here. This is a big dip here. I mean, if we'll call that a dip, we will. And I know this seems like this was a very long time ago, and that was an extended trade pattern there. But anytime over this time period, from here to here, we have seen nothing but good news come out of the idea for Lululemon. So I think, part of the idea is, and I talked about this in my top stock pick of the week, men's clothing is now starting to become a big thing at Lululemon. And I'm even seeing that men's casual wear, not just shorts or athletic gear, but business casual pants are a big deal from Lululemon. And the comfort is significant over what you're probably used to. So take a look at Lululemon pants offering for men, if you're into that sort of thing. And if you're not, take a look at the stock chart and notice that there are solid fundamentals here, good growth story. This is one where the market is a little bit weaker, that you could pick up on a little bit lower price. All right, well, let's move on to the next one. And this one comes by special request. And I don't normally do special requests like this, but Danny in our booth decided, hey, Callaway, ELY, he said, I know that this one is a A for growth. And I know that it's a Zacks rank number one strong buy. And Danny, I'm going to guess that probably owns this in his personal portfolio. That, or he's a huge golf fan. But ELY, interesting time here for a golf play, because, I mean, we're getting to the end of the season here. We do have a Tiger versus Phil Mickelson pay-per-view special thing out there on the horizon. So there is some interest in here, and you would think that this would be the time that you wouldn't want to be interested in a name like Callaway, but that is possibly one of the better times. Let's take a look at why this stock is a Zacks rank number one. So we can see 90 days ago, a loss of 6 cents was projected for the quarter, but that has flipped to a gain of a penny. That's a nice move. But here we see the next quarter after that is seeing the negative trend here. So kind of a up 7, down 4 move, but that's still a +3 in my books. And you can see this is what really matters here is the full year estimate moving from 81 cents to a dollar and holding steady. So this is just a thing of like pennies shuffling around here. But for the most part, the number, the dollar, the 81 cents to a dollar is holding steady, and that's good. Here we see 88 cents to a dollar eight, and that number, I like to see this kind of trickle up move here. 106, 107, 108, constant improvement there on your next fiscal year. We can see the company beats, and they're pretty good sized beats. So 4 quarters ago, monster beat. So if we can, do stuff like that, I'm sure that will be good news. Now, this is where you really got to get your long drive out here for your big Bertha. Oh my gosh, look at this chart. Last 3 years, ooh, it has been slow and steady and nice and easy. I mean, this comes to you courtesy of Danny McPherson here, really giving us a great idea here. I mean, this is kind of looks like a dog leg, right? Maybe a little bend. If this is the tee box here, I'm hitting here towards the green. My drive would go off over here if there's water. So yeah, we'll stop talking about my golf game. I haven't played that much this year. But boy, look at this from a lows of about 14 up to 24 here. We still got a couple months left. Could this be a double for this stock this year? I think that obviously golf is always something of interest. When the economy is hot, people have the money to buy new golf clubs, new golf balls, things like that. It's a disposable income area. Everybody seems to be employed that I know, which is kind of crazy. Lots of job openings, so there's potential for wage inflation coming. And what are you going to do with that extra money? You're going to take up golf. At least Danny hopes that you take up golf. And I do too, because I like the sport of golf. And, if you're going to profit from that, ELY is a good stock. Look at that. That is just nice and easy. All right. Well, that's it this week for the two aggressive growth stocks that I have for you. Be sure to tune in next time when we profile two more aggressive growth stocks for your aggressive growth stock radar.